We have two guests in the studio, members of parliament, one from the National Assembly, one from the Senate. Both are very, very, very instrumental in the conversation that we'll be having today. It's about Finance Bill 2023, which is before Parliament, and we'll be discussing it. The National Assembly Chairman of the Finance and National Planning Committee, the Honourable Kuria Kimani, the MP for Molo, is here with us. Good morning, Mheshimiwa.
Good morning, listeners.
Good to have you here today.
Good
Karibu
morning.
sana.
Thank you.
And we have Senator Eddy Oketch. He is a senator from Migori County and a member of the Finance and Budget Committee of the Senate. Good morning, Senator.
Good morning, Eddy.
Karibu sana.
Morning.
Karibu sana.
And good morning, my brother Kimani.
Yes.
Good morning, Senator.
Salimia nani hivyo namna hiyo.
Kini akona handshake.
Hakuna.
Pengine there is handshake. We don't know.
Mheshimiwa, you've invited the public to submit their views. Just take us through that. What's the deadline and then what happens?
Thank you very much, Latif. In our Constitution, Article 118 provides that no law shall be enacted by Parliament without the involvement of public through public participation. So on Monday last week, we published on our dailies invitation for members of the public to write to us to submit their memoranda. As at close of business on Friday, we had received 1,300 memoranda. And I'm sure they have come even more during the weekend and after the President's address last evening, which, again, congratulations. You watch you very objective and very focused in your questions in the address of the plan, the state of the nation with His Excellency the President. And from next week, we are going to have now the sittings for various stakeholders because most of these taxes, for example, if they touch on the Kenya Association of, if it's like manufacturing issues, we want to hear from the Kenya Association of Manufacturers, and like for the this housing levy, we definitely will want to hear the views of whether it is the teachers, whether it is the workers. So we're going to have an objective, hoping that you can do it for like 2 weeks or at worst 1 week, and then get to really listen to the public. But we have also again received in soft via email a lot of recommendations. And what you have, we know is a great idea. It's a brilliant idea because we have one objective that Kenyans have expressly told us that they don't want us to continue to borrow. And even if we wanted to, we don't have legroom because we have a 10 trillion ceiling set by Parliament. So unless perhaps you go back and change that ceiling, which depicts the whole purpose why, again, you put that particular ceiling. The economy is slowly recovering from post-COVID-19, from the Russia-Ukraine war, and there's show of a lot of positivity in most of this, in very many sectors. And you're hoping that the tax measures we've put up are going to spur back economic growth, lead to more employment, and lead to more growth in GDP. But to directly answer your question, we want to be very objective in our public participation because previously we have had comments that have been brought forward by members of the public that have actually become better ideas than what the original bill had. And by the time we're done with the public participation, we convince the committee and then we convince the House that we've had, always when you do public participation, you have a more smoother process. And most of the time you end up getting very brilliant ideas and some that maybe were not foreseen or maybe even sometimes were not part of the bill. Yep.
And I guess coming to you, Senator, as well, the question then is, this participation that is coming from members of the public, will it be used? There's a difference between seeing it and then taking it and applying it to a final decision that then will be made. Unequivocally, what then, all these views that are coming in from the public, how will they actually be used? Do they play a part in moving a decision in one way or another, and will they actually be applied?
I want to tell you for sure and for a fact that, and this is not going to be the first time we have had, whether in the last, I've served in the Committee on Finance and National Planning, though I was just a member for the last 5 years. And I'm telling you for a fact, the times we had excellent ideas and we actually put them in the report and they actually got adopted. And even when we sought deliberations from Treasury, because this is a Treasury document, it's an executive bill. Even when we thought and said, fine, these stakeholders are saying like this, Treasury has said, actually, yeah, that doesn't harm. That's a good plan. We can work with that. The only thing that we must also know and do is, if we were to take the views of 3,000 people, they most likely will have 3,000 different views, or at least 1,000 different views. There's no way we would necessarily have 3,000 bills. But I'm saying we are going to listen to the public objectively, and where those proposals lead to the same solution. Because we want the same solution. We want our economy to work. We definitely need to raise our revenues. We want to expand our tax base. That's for sure. Because we have dug ourselves so into the hole that we can't continue to dig ourselves more into the hole. We must find a way of getting out of the hole. And if then someone gives an idea that definitely works, come on, it would be stupid not to take the views of that particular person and put them into action.
What qualifies as an idea that works?
It's a whole debate, and you know, Parliament is a house of debate. So it's about having a conversation. It's about having a conversation.
Senator, the minority side on both sides of the House has said they flatly reject the proposals as contained in the finance bill. Why?
Thank you. You know, first of all, I've listened to my brother talking about objectivity with regards to reports that will be given. And, you know, there is a traditional African saying that if a snake bites you on your way to the river, you will never forget that path. And one of the reasons why we are, at least, especially from the members of the Senate, why we doubt whether there is genuine engagement in this public participation is because of how DORA bill was treated. The DORA bill was the bill that was looking at the division of revenue, the vertical division of revenue required under Article 203 of the Constitution. And there were indeed very serious conversations that went. We engaged serious stakeholders, and I like the fact that my brother Kimani is talking about aggregating this as much as possible to the extent that it is practically possible to take those views, and to the extent that our committee, their committee, engaged various key stakeholders, including people like KRA, who are given this primary mandate under Article 216 of the Constitution. And the most interesting thing was that bill even had errors as it was proposed from the Treasury. For instance, we know that you are required to be able to divide this revenue based on the the previously most audited finance bill, and the ordinary revenue that we add is with the one for 2019-2020, which comes to about 1.7 billion, and to the extent that our
trillion.
Our 1.7 trillion, yes. To the extent that our own finance and budget committees identified placement errors and mathematical errors in that particular bill, pure mathematical errors, and advised the Treasury that here there is an error, here there's an error. The National Assembly, most people, whether it was an intellectual laziness or just lack of pure goodwill, passed it to that errors. When it came to Senate, senators from the other side of the aisles also passed this with the same errors. So we have no reason to believe that this public participation is genuine based on the DORA bill. The second reason is that the government seems to be overburdened with just basically cash crunch, to the extent that the way the current finance bill is framed is actually not willing to solve what I would call responsible taxation, but basically do harambe for government. And the reason why I'm saying harambe is because you see this desperate tendency to want to convince IMF and other countries that gives us concessionary loans that we can actually be able to get money to tax and pay our debt. And that's a bad principle, because when you are doing a finance bill, especially that overly touches on taxation, you must always look at three taxation principles. The first principle is what we call the efficiency principle. The efficiency principle recognizes that taxes actually take money out of the private sector mostly, of course with a few public sectors, but mostly the private sector, and channels that resources to the public sector. So when you are doing that, for the private sector, there are losses that are experienced to the extent that those losses affect their business decisions on how they get jobs to people, how they expand on products, and how they build brands. Because countries that have made strides in the world are countries that have got strong brands, Coca-Cola brands, which kind of brands. You think about all of this. And then the second tax principle is bearing and sharing the burden. And that one now talks about the common mwananchi. The common mwananchi who works for KTN, who works for Senate, all these people. When you are taking taxes from them as well, you want to be able to sure that you are sharing burden to the extent that those taxes make sense to what they are going to do vis-a-vis the benefit they are going to get. Then the last one is just the collection mechanism that ensures that there is serious compliance with regards to that if you have classified, for instance, right now we have got 6 million registered taxpayers in Kenya, which constitute about 12% of our population, and they are giving our government, they should ordinarily give our government about $20 billion worth of taxes. But then you find that the collection mechanism makes it impossible for people who are in the position of power to actually be able to be taxed. In fact, some of the biggest tax evasions that we are seeing are happening at the highest apex of leadership. When you're in position of power and your business is running, you find ways of evading taxes. So the collection should be a fair collection to the extent that everybody is able to pay their taxes as they should. Because otherwise then you have like what you're seeing right now, 45% of people who are supposed to be paying in that bracket are the one who are paying. But then the burden is shifted to the people who don't have the power to be able to protect themselves against the tax regime. Now, those three principles are all negated in this finance bill to the extent that then you question, and I can take you through it as we'll be going through the conversation, through every single tax proposal, how this is negated. And then now you ask yourself, if you've deliberately negated these three principles of taxations, are you actually genuine about public participation? Because that one is a deliberate move. You start with a principle before you get to a proposal. If your principles are already wrong, how then are we doing public participation?
Okay. Mheshimiwa Kimani, do you believe that this bill, as it is currently presented, makes sense and would be acceptable to people of Kenya?
Let me tell you, and I like the conversation my brother is initiating. We have for once made sure that everybody, whether it is the person with a small business or the person with a big business, gets to pay their rightful share of tax. Because what we've been seeing is that only the 95% of our collections are paid by 5% of our population. So we have had a few companies or a few individuals paying taxes and everyone else evading it. And how are we curing it? For example, all the big tech, all the big companies, every time they'll get a tax invoice that they don't like, or they will try to exploit all the internal dispute mechanisms. But of course, they're just doing it for the sake of it. The objective is to go to court. We have cases in court that are ranging from as time ago as 2007. So you get a tax bill of 2 billion shillings, which you should pay. And because you don't want to pay, you make sure that the court process delays. So what are you doing about it? We're saying, fine, if you have a dispute on tax, deposit 20% of the dispute amount. But let me make it even better. In the event that the court rules against KRA and for you, we have imposed in the law that GUK will have to refund you 20% within 30 days. So
at the end of the court process.
At the end of the court process. So in that case, it will be in our best interest, both yourself and as a businessman, and me as a taxman, first of all, to make sure that that case doesn't go to a court arbitration, for example.
Yeah.
Because we are trying our best to review and to retrain and to change the thinking of Kenya Revenue Authority so that we can become an authority that has a conversation. So we are doing that to make sure that it's a win-win situation. Then on the other hand, also, you are guaranteed that once you get an award, then you're going to get your money back within 30 days.
Can I ask
we
a
have
question
around
on that
800, just a sec, we have around 700 and we have around 845,000 registered companies in this country. Only 10% of them are paying tax. Most of them is that some of us that are very ambitious when we're in school and university registered companies. So you went to register a company 10 years ago, 5 years ago.
Never traded.
And because you never traded, then you never filed returns, then you find you have penalties and interest. And some of these also penalties and interest is some of the problems you're inheriting because you probably did some contract with the county government or the GUK and you got and they delayed in paying you or and therefore you, even if, for example, you were able to pay your payee, then you still paid it late, so have interest and penalties. We've said for all those interest and penalties, which amount to 1.9 trillion shillings, as expected, it reads as how much you're supposed to collect from the public as tax debt. We're saying apply for amnesty. And as long as you have paid the principal amount, we're going to forgive you the interest and penalties. It has never happened in the history of this republic. We are, for the first time, we are offering a second chance to our businesses. We're saying that we can, a lot of, these people can't even get a tax compliance certificate, not because of a mistake of their own. Someone did work for the county government of Nairobi, then they have never been paid. But because it reads that there's a holding tax, which this company never remitted, it has accumulated not just the withholding tax, but interest and fines.
So I hear you saying
it has never happened in the Republic of Kenya. You're doing it for the first time now.
So in its entirety, Mheshimiwa, this bill is good.
Ndu, my in this discussion here, I'm going to show you the merits of it. And you, Senator here, is talking about the demerits of it. And you're hoping that when we talk about the merits and the demerits, we can have a conversation and say what is good. But I'm telling you, overall, this is the most progressive finance bill we've had for years.
It's a better deal than before.
It is
I want to ask a
much
question
better
before
deal
we
than
take a
what we've
break.
ever had.
And it's really on that what you've just talked about, the 20% deposit or worth of the tax dispute. What prevents KRA from employing this for mischief? KRA has been given a target to raise X amount of money by X quarter. And so they see that they are falling short of that. And they just tag all of us with some disputes. And they say, all right, so you either pay up or you deposit the 20%. If today they come to your company, Kuria, you are a big poultry farmer, you're telling us the last time. And they come and say, you've not been paying one or two of these other taxes. And they say, you owe us 10 million shillings. You're supposed to deposit 2 million shillings for you to kuanzia conversation. With that,
in fact,
you give them 2 million shillings, they hit their target, and then later the case can drop.
But I want to improve just your idea so they can respond to it together. Because basically the question you're asking is whether KRA becomes a toll station.
Yes. Because
you are saying every assessment that I do, you are immediately owing me 20%.
Just because.
The danger, even the danger, because when you're developing this kind of laws, you have to take it within your practicality as a country. The danger is actually that KRA official immediately becomes a shareholder in my company. Why? Because if everything that I say you owe, then what that's been, instead of giving me 20%, boss, why can't you just give me 5%? I clear your books. That's what I was talking about. You must look at your laws, whether they are actually improving your collection mechanism. Because if a KRA official says that everything that you owe them, everything that they assess you owe them, then it basically means that companies will start having their specific KRA officials.
So it enhances corruption.
Yeah, it basically it's going to be the highest form of enhancement of corruption that is going to even derail tax collection, because a company would rather have their person paying, doing the assessment, they pay less, they avoid these court manenos. You know, if you go to a criminal justice system, this thing even makes KRA more powerful than our courts, because the equivalence is this. Today, you get a Kenyan who has been accused of obtaining money by false pretense. Then you take them to the courts. Then when they get to the courts, immediately they are told, of the money we are claiming, you first of all do 20% of your your intended
as we handle
fine,
your case.
as we handle your case, or serve your 20% of jail as we handle your case. Doesn't make any single sense. And I want to hear what Kimani has to talk about this.
Interestingly, Senator, just the example that you used.
Yes.
If you are accused of obtaining money in false pretense and you go to court,
Yes.
you actually have two options. If you have to stay in to be a free man, there's a cash bill or a cash bond or a what do you call it, or a bond that you need to give to show commitment that you make commitment to the cause. And this particular thing,
but it
by
the
time
percentage,
it's just a percentage
of the amount.
Yeah, and it's not also prohibitive
the
to the
gravity,
access of justice.
Yes.
and the last time I checked, it would depend on the gravity of the crime.
Exactly.
If the bigger the crime, then you could call it a percentage. We're just calling it potato. It's a different word for it. But the bigger the crime, then the more the cash bill, the more the bond. And if it was just a traffic offense, then you can actually go home on a free bond. And even if you were to use that analogy, then actually the Kenya Revenue Authority loses if you have to make a deposit of 20%, because their target is 100%. And this 20% that you have given to them, it is not an income. It's not an income to them. So it is not recognized as income. They cannot report that in their targets for that year to achieve this particular target.
Let's take a break.
We got this 20%.
Let's take a break. But Mheshimiwa, streamline the system so that the courts do not, or this dispute does not last long. If you're trying to address the issue that the dispute is lasting long, streamline the system. Don't say that because you are disputing what I have told you, deposit money because you want to delay. But let's take a break. We'll be back.
I'll come to how we're going to streamline the system.
All right.
This is the Situation Room, the only way to start your day.
Senator for Migori County, Eddy Oketch. He's also a member of the Senate Finance and Budget Committee. And the Honorable Kuria Kimani, the chairman of the National Assembly Committee on Finance and National Planning. We are talking about the Finance Bill 2023. This one has gotten a lot of attention, a lot of conversation, unlike previous finance bills. Tells you Kenyans are woke. They read, they hear, they follow. Now, as we're talking about that, and we'll be talking about housing, let me tell you about another easier way of getting into owning a home, a more direct one. So walk to Two Rivers, you'll find houses being built by Centum Real Estate. Look around and see the ones that they're building. So close to whatever, close to proximity to health facilities, proximity to shopping center, proximity to children's play areas, proximity to hotels, proximity to everything. And then you see, okay, and then good roads leading into and out of there. Then you ask them, so I'd like to buy a unit. They tell you, possible, but I don't have all the money right now. They tell you, that's also okay. There's something called a Kenya Mortgage Refinance Company. If you walk into your SACCO or your commercial bank, you can actually ask them, I'd like a KMRC loan to buy a house at Two Rivers. Then your bank will tell you, Nesasawa, we can give you a mortgage up to around 8%, less than 10%, all right? And you pay for up to 10 years or thereabouts. So your rent now becomes
your road to ownership.
Your road to ownership. See, that's more direct.
It's beautiful.
Yeah. Mheshimiwa Kimani will tell us about the other one of the housing fund. But respond first to the issue that we're talking about with KRA and what Senator Oketch is talking about, making it easier for them to collect tax.
Thank you very much. Let me tell you something that the business sector, and if you talk to any of the big institutions that produce or sell accessible goods, for example, they'll tell you about something called inflation adjustment. And they have tried to beseech government after government to take out inflation adjustment because they want a predictable business environment. You need to be sure that once we have the Finance Act into law, then at least you can have those rates of taxes, even if it's just for a year. And by the way, we are also coming up with a national tax policy. And hopefully then that we are actually even going to have a more predictable tax environment where we don't have again to change the rate of, we don't have to be worried about the rate of taxes every year. The inflation adjustment allowed the Commissioner General, even after the passage of the Finance Bill into Act, to change the inflation parameters, which consequently affected the amount of taxes that were payable by these businesses. We have taken that out. We have deleted that clause. There will no longer be an inflation adjustment. This is a huge win for our businesses. The small, the turnover tax we have expanded the bracket for turnover tax from 0.5 million to 15 million shillings a year. What does that mean?
And the percentage as well.
Yeah, we just go back to how it's supposed to be, because remember we had brought it down to 1.5% during COVID to support our businesses during COVID times, because nearly 60-70% of our business were closed at a particular time. Now they are open. The essence of this is that if I have a clothes shop, I sell clothes in town.
Yep.
And I sell 100, and my sales per month is 100,000 shillings. So per year is 1.2 million shillings. So 3% of 100,000 shillings is 3,000. It means if I just do a check to KRA of 3,000, I have paid all my tax obligation.
For the year, for the month?
For the month. But this is 3,000 out of your sales of 100,000.
Yes.
If your sale is 1 million shillings, and there are quite a number of businesses that have sales of around 1 million shillings, and those are the ones, Senator Oketch was saying, that are being prone to abuse by the existing tax system. Is if your sales per month is 1 million shillings, give us 3% of that is 30,000, and you're done. As in, that's all you need to do. You don't have to worry what is tax allowable and what is not. You don't have to allow what is deductible and what is not. You don't have to go through a complicated tax system. And once you do that, then you've done obligation.
In what category of obligation is the turnover tax? Because when you're filing and you're applying for obligations with KRA, you're either applying for an obligation of income tax or VAT. All these other taxes. What do you apply for?
Most of our small businesses, or most of our, let me call them informal sector businesses, operate as a registered business name.
Yes.
You mostly go to Huduma Center and call it Undu Supplies.
Yes.
And then you go and open a shop. And you remember, these are the people that you didn't know what tax to pay for a very long time.
Yes.
Until now, the introduction of turnover tax. That's why we're saying, if you pay that 3%.
So you don't need to apply for any obligation with KRA.
You don't have to. You pay turnover tax.
Do you need an ETIMS?
You don't even need the what do you call it? The old what do you call it? The old we're calling it ETR, or what do you call
yes.
it? You don't even need that system. But if the goods you're selling are vatable, that's the difference. If the goods that you're selling are vatable, is that the KRA is doing a new software system. Like it's not a physical system. It's just something you install on your laptop or your phone. And if you said, if that would mean that you have graduated to sell it,
and you will then have an obligation for VAT.
Yes.
However, Ndu Suppliers is supplying Oketch's company with goods or services. Okay? At the end of the year, Oketch will be wanting to claim, because I have made this kind of turnover at the end of the year, and I need then to start deducting what my expenses have been. One of those deductions will be 1.2 million shillings that he paid to Ndu. So then he can claim that this is part of my expenses for the company. The requirement is that whatever his invoice must correlate with Ndu's invoice.
Certain.
Ndu did not issue an ETR invoice.
Yeah.
Because Ndu is not registered for the income tax obligation. Now, here is the issue.
Yeah, Eric. Let me give you a typical example, and I want to explain this so that you also see what you're trying to cure, where we're coming from. On a random Saturday, I'm in Molo, and I hear conversations about ETR receipts, and they're like, "Well, kuna ngapi?" In fact, I'm carrying a friend in Makalan fuel. Then I don't ask for the receipt because I don't I don't use the receipt for anything, so I don't ask for it. Then says, "No, I want to take your receipt." So he actually asks for a receipt and then says, imefika 200 sasa. So I asked him, what is it about this receipts that you're collecting? And then he tells me that the receipts are to claim VAT.
Yep.
So you had people who were it was a big business. Like even people now having their own fake those machines
ETRs.
that were making those ETRs. What we're trying to change as a country is, I want to do. Okay, that's example one. Let me give a different example. Go to Luthuli Avenue here. Buy a television set or buy a phone. The first thing you asked, unataka na risiti ama unataka bila risiti? As a result, 16% VAT on electronics on a TV that costs 100,000, you have changed the cost by 16,000. Then the business opposite that wants to be compliant, you have competitively disadvantaged them by pricing your items 16% less. And what you're saying, Eric, here is, you see the way you will go to and ask for, whether it's a beer or something, and then some people you'll find will be keen to check whether it is legitimate or not, whether it is the right drink or not. We want to change that to the business sector, so that I do business with people that are paying their rightful share of tax, so that it's also good to me because it makes our businesses a level playing field. That if a particular product costs 200 shillings, it's going to cost 2,000 shillings, the same amount of money if Ndu is selling it. So what's going to differentiate us is the quality of service. And that is the only way we are going to encourage a competitive business environment. But as long as we are allowing all these tax cheats, it doesn't matter how much hardworking Kenyans it doesn't matter how hardworking or innovative Kenyans are going to get.
Okay, Mheshimiwa.
They are still going to be disadvantaged.
We have about 10 minutes to go, and we must address these two issues, and I'm sure the Senator has questions on this. One, VAT, 16% VAT on fuel, and the impact that's going to have on the entire economy. And the second, of course, the housing fund. Senator, ask your question.
I was listening very well, and I just think that it is important that I caution my brother here on some sweeping statements when it comes to tax, because he has talked about something like excise duties and any excisable services. For every kind of proposal that this bill is making, there is another whole lot of mess. Because if you look at something like excise duty issues that we have in the country, Kimani is not telling you that this bill is telling us that for all excise duties, especially on things like betting and any other accessible services, you have up to 24 hours to pay, or the commission has got the discretion in this bill to be able to actually make gazette a notice that you pay within 24 hours. You see, for every tax decision that you make, a business makes a business decision. Because if you are telling me that for excisable services and goods, I have to pay within 24 hours, the administrative cost for that is extremely high for me. Like, think about lawyers. Think about loans. Now, those loans are nowadays exposed to excisable duty. And think about the ripple effect that things like loans have in our economy. Because if I cannot be able to administer my loan as a bank effectively, basically I run out of that business. I will not be in the business of loaning people. I'll be in the business of deposit collections, and then I look at how do I trade with government, because it is more marketable to go for T-bills as well as bonds in government, and then suppress these businesses. And this is important because even if you go with that tax regime all the way to things like, right now they are targeting through this bill any adverts on TV, on radio stations, on billboards, and any adverts on print media.
Socials.
Yeah, that are looking at things like alcoholic beverages, gaming, lotteries, prize competitions. Prize competitions, is these competitions whereby you say buy one get one free, or if you win this, if you buy this, you win a trip to some places. The danger we start seeing is what you are pointing at. It's not just double taxation, but other multi-layered taxations. Because if you have added 15% on this brand of advertisement and something like prize competition, you have actually moved it from 7.5% to 20%. What does this mean to core businesses? And all core businesses, marketing is a bigger function in terms of employment. As little as if you go to grass company that is purely, designed as a business to focus on marketing. 70% of the people they're employing there is all marketing. If you look at, there is a company in town here called House of Leather. All those people are about 40% of their employees are these hustler marketers. They work with billboards, and you see them around working. If you have increased something like price competition from 7.5% to 20%, then on the other side, you have introduced 15% of excisable duty that didn't exist in the first place. And then you are telling them, no, you just increase it by 12.5%. You're actually lying, because you have to look at the 15% plus the increase of 12.5%, and you come up with 27.5%. What does a business make decision at that point? The decision is that this advertisement is no longer viable for me as a business. You're not going to force me on whether I choose what is viable for me or not. This is no longer viable. Advertisement is no longer viable for me as an option. Therefore, I leave it. And that means grass company lays off all the hustlers that you're targeting to help. House of Leather cuts at least by 50% all its employees, because that is the rational business decision. Another equation that Kimani must understand is that you can't just randomly say people are cheating on taxes or people are not paying taxes at all. Therefore, I'm just going to introduce any tax where I want. For instance, you can't say today I'm going to tax Aziad for being an influencer online when you don't understand that landscape. The truth that is there is that the companies that you think are evading taxes are actually not evading taxes. The government has not taken chance to understand the tech companies they're talking about. Today, Meta, that owns Facebook and owns IG, their taxation framework and levies that they put on our businesses, the remittance that our businesses are doing is based in Ireland. What happens with people like Saracen? Saracen ends up paying Meta in Ireland, and they pay them in dollars.
Yeah.
Okay? What did Nigeria do by understanding the landscape? Nigeria said, the first thing is, you as Meta or Google, who is based in Ireland and are taking money from our corporates, first, can you take money in terms of shillings and not dollars? What does that convention bring? It invites you to register a company locally here. So when you register a company locally as Facebook or Google, then the government has got opportunity to take its corporate taxes from Facebook, because Facebook is giving so much turnover taxes to the US government and not paying our Kenyan government. You want to tax an influencer as low as Yard, which even if you look at, they don't form the biggest basis of taxpayers, when actually the companies that hire them or the companies that give them opportunity for digital content are the people you should be looking at. This is why I'm telling you that there's a big mismatch here. Now, very fast going to the housing issue because of time. The housing issue, Eric, ask yourself, today in Kenya, we have got a working population and a middle class that is over 15 million. If you look at our mortgage market, on aggregate, all the businesses that we have in the country and all the people working in the country is only 25,000 people. What is the problem there? The problem is not taxation. And the problem is not contribution to these funds. The problem there is a problem of pricing equation with regards to interest. Our country has got some of the highest interest of mortgage from 18% to almost 25%, depending on which bank you go to. But if you go to where mortgages are working like the UK, it's as low as 1% to 3%. These are the things you should be addressing. Because when you start talking about you want to give a hustler a house, even if this hustler was to save this, a hustler who is probably earning 20,000 a month was to be deducted the 300 bob every month, even if you take 15 years, which is the average time for a mortgage to mature in Kenya, they will only have saved 416,000. The lowest cost of housing that they're developing right now is 2.5 million. In 15 years, how much will that household and how much will you be able to obtain with a saving of 416,000 in over 15 years? Doesn't make any sense.
Time is up.
Solve what is making sense, because for a hustler, Eric, the pension for a hustler, do you know what a pension for a hustler is? Their children. If I educate my child, they'll buy me a house. Do you know the biggest loaner for a hustler? They don't understand. The biggest loaner is not hustler fund and is not the banks. The biggest lender, not loaner, the biggest lender to them is actually a kiosk, whereby they go and write their book every day, which means that they are more into the subsistence loaning market than thinking about housing.
Imagine our time is up. We've come to the top of the hour, Mheshimiwa. I really want to appreciate you coming. You have an opportunity to join us again before Monday, before people start having conversations.
Okay.
Please accept to come back.
That's fine. But perhaps in less than a minute, it's not just this hustler, 300 shillings saving that you have very well calculated gets 416,000. But if this fund is used collectively to build a house near this hustler, where he can pay the equivalent of his rent and own that house, that would be amazing. So saying your rent is 2,500 because you earn 20,000 shillings a month. You're going to have government houses next to where you live, and you're going to stop staying where you're staying and paying rent for houses not yours,
not for the same
and
amount.
paying it and paying and having to own that house at the end of it all.
But have 150 years. 150 years.
Come for the next one.
Come back.